Okay, folks, we're going to take a look at the Forex markets now. This is over this is a 4-hour chart here. You can see here going back over quite a ways. So what we want to be doing here, first July 20th. Here was the key. If you remember here, we were looking for this market to potentially hold. This was Fed day, and of course it broke down hard. Then we rallied 2 days, and of course the first thing you want to be looking for on a quiet 2-day rally like that is 0.382. This is the mother of all easy trades. It doesn't work all the time, but it works a hell of a lot better than 60%. Put your stop above here. Then we've had the big breakdown, heading down towards these lows right here. Now you can see here, if we take this and move it on to a daily chart, you'll see that we've got a price objective down in here at 133.02. We're very, very oversold coming in here, so we could get some support right in here at this 135.80 level, down about another 50 points. But anything below here, we're heading down here. What you'd like to see is a nice little rally here, simple 382 rally. We've had some very few rallies here. You see this thing is not even rallying 1 point over the past month. This is very bearish. So we're expecting lower prices here in the British pound. Here is the Australian. Now this is a very important one, folks. So I've already looked at this on the daily to give you a heads up, because this is where we are. You'll see we're down at a 1.618 expansion here. But if we look at this on the daily basis, going back a little bit farther here, this is what's important. Let's clean out some of this stuff. You'll see where we are. From your low that we made way back in 2020, shut the front door just a minute here. Let's get this thing up and running. We are spot on, right almost exactly at the 382. I believe it comes in just a tiny bit lower here, about 60 points as I recall. So pay close attention here. Something that should be very, very interesting down here at the 382 level. Let's move this over and do one other thing. Let's do it on the weekly, just to make sure where we are here. There was a 382 on the upside, so now we're coming down here, and let's see where we are from your low up to your high. Yeah, you're just a little bit lower here, down about about 80 pips here. Should be some pretty strong support on the 382 on the weekly Australian dollar. Okay, here is the dollar index. This is a very interesting. This is the weekly. You see, we've taken out this here. We're making this ABCD on a weekly basis. If we put this up on the daily, you're seeing this is what we're watching right in here. But more importantly, folks, this is the one that you really want to pay attention to, because we just made this on the weekly chart. This shut the front door just a minute. Get this up here on the weekly. Hold it. Let's go down to the daily. Hold on just a second here. And this is what you want to be watching. You've got this low, this high, this low, and you want to see what that ABCD is. Let's get it up there. There's your AB. There's your CD. Bada bing, bada boom, folks. I think we made a high. It looks to me like the dollar is going to start to weaken. Whether it's related to the thing in Afghanistan or not, I have no clue. But that is the weekly ABCD that we just saw on the weekly chart. That's it right there. So pay attention to that. It could be very, very important. Anything above this level here, above 94, tells us this is not right, and we're probably going lower. Remember, if this is the dollar index, folks. Boy, the more you look at this, you got to be really careful here to be bullish, because look at this. We got a perfect A, B, C, D right here. Let's just look at the 382 off the whole thing, and that comes in. We could get as high as 94.87. That would be up 150. That would be a big surprise, but we could also be stopping right here, just because this is a perfect A, B, C, D. So that's it. Watch where we are right now. Opening lower tells us the euro's going higher, dollar's going lower. Here is the euro. We're watching this here. This is the euro on the 4-hour chart. Look at this up here to see where we are here. This is the why isn't the data coming in? Let's just a second see what's going on here. Folks, something's wrong with the data, because this only goes to the 9th, and this is something wrong with my data. So there we go. We got it all fixed up now. Okay, here's where we are. All right, we're in the middle of the month now. There's the 20th, I believe. Yeah, we're ready to go. So all we want to do is to see where we are right here, because we've had this is the same equivalent move that we're seeing in the dollar index. Let's get it up here. There's your AB. There's your CD. You see, we've made it now. This is where the pedal meets the metal. It's easier to see in the dollar index, but this is 53% of the dollar index is in the euro. So you got to be very, very careful. Also, what we've done here, from the low to the high, this is a 3-day move. We came down, went to the 1.27, so we got a chance here for strong support at that level. So let's pay attention to it. Now here is the Canadian dollar. If you take a look at this here, on the daily basis, we broke down below that 61% retracement. This would have been a failed Gartley. Once it went below here, you knew you were wrong. And if we look at this on the weekly basis, you'll see here we're setting almost exactly at the 382. We made that. So the Canadian dollar, if it's any good, should start to rally this thing. That means the dollar could be weakening here. So this is something that we need to pay close attention to. This has been the strongest. So this has been a really, really monster move. We went from 68 to 83. We've only backed off to the 382, so we're ready. It looks to me like the dollar is going to weaken. Whether it's related to Afghanistan, don't really care. Now here is there's the Japanese yen. We'll get it up here to let you see it right here. We're the same thing here. We backed off. And all we did over the last 2 days is rally back up. Where'd we stop at? Exactly 78% level. So here again, what we've got here on the daily chart is a head and shoulders pattern. There's your left shoulder. There's your head. There's your right shoulder. The right shoulder is lower than the left shoulder, which you really need. You can see here that the time is relatively close. So if this is correct, we're not going to get above here. Anything above here violates this. Other than that, we could have the ABCD to the upside. So it's a head and shoulders, as long as we don't get above this level right in here, which is around the 91.70 level. So that's what we're watching in the currencies tonight. So live every day in an attitude of gratitude, and may God bless.